Mic test, mic test, mic test, mic test. Hello, 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 hello. Yes, hello, 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 hello. Hello, 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 hello. So, hello guys, and welcome to the 151st edition of the Trading Opportunities webinar. Before we continue with the webinar, I'm just checking the microphone here. Hopefully, it's working. Raghu, good evening. Hopefully, everyone else is able to listen me and watch the screen share clearly. Just confirm it at once, Raghu, and those of you who are also online here can confirm it. Multiple confirmations would be better. But anyways, I will not wait because at my end, at least it's working fine. So I'll just give you a very, very what you call quick introduction before we move forward with the actual content of our weekly series webinar. So first of all, my name is Neerav and I'm the admin and owner of 50hours.com website as well as 50 hours market analysis YouTube channel where we've been conducting these webinars, and we conduct them every Friday 10 p.m. GMT or sorry, at 10 p.m. IST or 4:30 p.m. GMT. So if you are interested in following us live, you can just tune into YouTube or LinkedIn because we also go live on LinkedIn simultaneously, right? And that being said, let me just give you a quick rundown of how these webinars are generally conducted, and we have made major change in this webinar. And what is this? There it is. So generally we cover these markets: euro followed by crude oil, gold, S&P, Nifty, and BTC. But I have decided going forward to reach a wider audience to drop this index and replace it with something more volume or more global intensive, because you already know our client base is completely and services are all completely for the international audience. So it doesn't make any sense to continue covering a market where I don't get any clients. Right. So I haven't decided which index to cover because I'm myself covering DAX from Germany, ITSI Russia, IBOVESPA Brazil, what is the Hong Kong's Hang Seng, yeah, and Nikkei from Japan. Everything is being covered. So I'm not completely sure which one to cover as a replacement. Probably I'll wait for some responses from the Slack private group members to see. But going forward, we'll just be focusing on the international heavy volume markets, right? Or basically a global coverage where we want to reach more clients, right? This decision has been made after much thinking, obviously, but it had to be done, so it's being done now, right? That major announcement aside, here is our past track record, etc., etc., yada yada. I'm not going to go into too much detail. This is just documentation of our 6 years till 2021 of webinars started from what is 2018, 2016, and whatever worked or didn't work, we have just compiled it, and you can see the live webinar series, etc., etc., written here, right? Lastly, if you are interested in getting updates of our market analysis, etc., etc., or what do you call weekly newsletter, you can subscribe to the mailing list here. And if you're interested in getting our private updates, which are basically the private Slack group, you can send the inquiry using the contact us page here, right? Of course, if you are unaware, I also have a video course which you can visit or check out here by visiting the middle link, and the book on Amazon is there. Right, I won't take any further time. And yeah, so Raghu, I will not be able to do that. Perhaps you should just message me in the Slack group, and I'll be free after the webinar and we can have a quick chat. Right. So, right. So, without wasting any further time, what I'll do is I'll go over the charts of every single instrument, which is this Euro USD, and then we'll go over the live chart. What I mean is I'll just check what is was being discussed on Euro USD in the last webinar, and what will happen in the what has happened since then, and what will be the expectation for the upcoming days or sessions or the current session. Right, so that's the way we will proceed. And first of all, here is the recording from our last session. I'll just click and let it play for once. Remember, guys, if you are watching it later on as a recording, always turn the video quality to 1080p so that you can have the best experience. What are we seeing here? What are we seeing here? What am I looking at? Gold. Okay, there was possibly a trade there. So euro, we were expecting what, some upside correction, I think. Once again, where is the short term count? Okay, short term wise, I think we were expecting downward correction and then upward movement. I'm not sure here what's going on now. And all right, so yeah, there it is. There it is. I got it. So we were counting the structure as a, I think, a zigzag correction, which is possibly complete here, and some upside leg was expected. Secondary view was that perhaps more downside is remaining, I think. Yeah, so we were expecting at least 3 legs up, even if the whole count was not correct. We were expecting that some upside will be seen on this counter of euro, right? That was our main theme on the euro chart. Right, let's now not waste any time and actually go into the actual live chart and see what has really happened since then, and what do we expect from here. So here we have it on screen, live chart, and let's go and check Horley. Okay, I recall we had this. Again, I was not able to show the whole recording, and I think there was a lot of stuff discussed, or perhaps not. I'm not sure. But one thing I'm sure is we were expecting this impulsive continuation, which we have been analyzing. Let me start the drawing tools, by the way. In the meantime, let me just check the comments. Good evening, Raghu, and thank you for the confirmations. Everything sounds good. K. Hamura. Hi, K. Hamura. Hello, Marco, one of our private group members. Again, Joe, our private group members. Let's see, going forward. Hi, Charles. I'm well. How are you? I think you are the one who sent me an inquiry last week. I have read your book. It is very interesting. Thank you, Marco, for the nice comment. Hopefully, you can leave a review on the Amazon page as well. All right. So, nothing specifically to answer here. Of course, why would it be? We haven't discussed anything yet. So now that we are on the live chart, let's just focus here. This is our point of reference. We are looking at this market as an impulse down. I think that was the count, perhaps. But whatever the case is, we were looking at the fifth completion. That was the main theme, and this was the trend line we were following, I believe, or perhaps this one. Whatever the case is, it broke above it, and then we were expecting 3 legs in the other direction. So far, it has all played out. So that basically means we are not really interested on this left-hand side. We are just interested in this right-hand side. So hence our new point of reference becomes the price level around, what is this? 1.017532, and the date is around 13th January. So we are just interested in analyzing this market. So for the sake of that, I'll just zoom in. 15 minutes chart should be enough. And here we are. So what we are assuming here is that from this point of reference, we are assuming that there is a possible diagonal here, and after the diagonal, we have a corrective structure in play, right? Now, given the fact that we have a diagonal and then a correction in play, that means correction as such we know will give us three-way structure, could be zigzag flat triangle. In this particular case, looks like either a zigzag or a complex. Let's see what I have labeled it as. I have labeled it as a complex. So basically, from this point of reference or the price level around 1.05337, we are looking at a WXY complex correction. WXY complex correction will look like this: three legs down, three legs up, three legs down again. So that's the first leg called the W, second leg X, and then the Y. So in this particular case, we have the W here, three legs down complete. X is possibly complete here. It could be something else as well. And whatever the case is, we are then looking for a Y down. So I have two scenarios here. Either this is the Y continuing, that is the market will go somewhere within this range 1.04112 and 1.03543. After going within this range, the market will then go down. That's the first idea. So we are expecting downward movement, and for the sake of catching it, I have pushed an alert at 1.03666, right? Nothing very fancy, just a break below it, and we are expecting a wave Y in progression. So I'll be looking for scalp shorts here, right? Second idea is that this market is doing something more complex, in which case we can assume that this X will just continue to propagate sideways within this yellow box range, right? So it will just go up, go down, go up, go down, and then go lower. So again, doesn't really matter. Our alerts are placed near the downside break at 1.03666. So I'm personally assuming that I need to wait and watch for a possible short setup. The idea, the whole count I have just discussed. Target wise, I'll just remove this. 1 second here. So target wise, we are assuming that it can take support within this private price range, which is I think 50-60% retracement of this entire upward movement, right? So given that we can just note the levels because they are going to be possibly important, roughly around 1.036 and 1.0311. So within this range, we expect the market can take support. I have discussed the whole setup, and this is actually looking like a very clear market for the time being. When it was propagating to the upside, it wasn't very clear. We knew it will go up, but the structure wasn't the most clearest. But now it looks like we can have some scalp short plays. So definitely keep it in your watch list. It's definitely going to give us some good trades in the coming sessions, right? With that being said, I'll wait a few moments. If you have any questions, just let me know in the live chat. Otherwise, we'll move over to the next chart of crude oil, where again we have some very interesting stuff and clear stuff going on. Good morning, Luis, one of our regular viewers on YouTube. Okay, so I am not seeing any questions. So what I'll do is I'll just move over to our next chart of crude oil. So here I have loaded up the last webinar's recording, which was conducted on 24th of this month. And here is a chart of crude oil now on screen. So let's see what was being said in the last webinar before heading forward with our current discussion. We were expecting some downside movement, 2345. We were expecting a possible diagonal. That was one count. Let's see if there was something else. Was there something else? I think there was a nested impulse, which was there. Anyway, it looks like our main count was suggesting some more downside movement possible as a diagonal. And then the idea was that if the market is really moving as a diagonal, then we will wait for this trend line to get broken, and possible longs was the secondary, not secondary, was the add on to the analysis or the expectation from the analysis. Right. I don't think I can go over the whole thing, but it looks like the thing which was the main theme or whatever. So now I'll not waste any further time. And here we are on the live chart of crude oil. It looks like my remaining shorts will not work out. The stop loss was, I think, 73.9 something. Yeah, 73.9 here. So, anyways, what I'll do is first of all squeeze the chart, and then we'll discuss what I think is happening here or not happening here. So first of all, from our last discussion, which was done on 24th January, things seemingly have changed. 24th January, we were assuming things as a diagonal, which was complete, and then upside movement. Nothing like that has happened. The price was somewhere here, roughly speaking, somewhere within this range. And since then, things have changed a lot. So let me just reduce the stuff on screen and show you what we are expecting. First of all, I am trying to count it as a nested impulse, but it doesn't look like one. Then I have gone around and checked if it's possible to count the whole thing as a diagonal structure. It isn't a very clear diagonal either, although I can force some counts. For instance, I can force an ABC for 1, up for 2, down for 3, up for 4, down for 5. But that does not look very pleasing as of now, right? So let me just remove the marker for discussion from last webinar. Yeah. So as I was saying, it does not look very pleasing as of now. So it is suffice to say that this market is unclear, right? That's the first thing. So whatever trading opportunities I'm taking here or trades I'm personally taking here are very short term or scalp kind of trades and nothing very swing or carry forward kind of trades here, right? So basis on that, let me just discuss the nested formation here, which again does not seem to be holding very much clearly. So we have in a impulse down 5 legs. Let's just compare where we are in comparison to the rough structure on the right hand side. We have completed the first and the second, right? And then it is a double bracket 1, double bracket 2, and we are then heading for the, what is it, whatever that is, third of a double bracket third, right? So basically we are within this leg. We haven't yet completed it, and once it gets complete we will have some correction and then another leg down. So that's the play here. So basically it's suggesting at least 2 legs in the downward direction are remaining if this count is correct. But then again, as I just said, the count is not very clear, so we are not relying too much on it and we are only looking for short term plays. I did have a short which I took an hour or so ago. As a matter of fact, we can actually just go and check what was the crude trade. Here is the crude post book profits on majority shorts remaining. What was the play? So we had a scalp short placed and stop loss, etc., etc. This was the play we were looking for the market to go and hit our minimum targets. So booked partial and then remaining targets are still on play, right? So that was a trade which we took. Basically, took this move here, and some position is still left on. Stop loss is 73.74. It is hovering very near the stop loss, right? I mean, it has gone very near the stop loss, not hovering, right? So that's the play, and that play we are expecting just that it's continuing for the third leg down, and then there will be a fourth, and so on and so forth. So nothing very fancy. As I just mentioned, we are expecting 2 legs down anyways, if the count is correct. So I made a play accordingly. So it's not a very huge position at this point in time. The bigger position I have already closed, keeping in mind that there is less clarity. And apart from that, I don't think there is much to discuss here. If you guys have any doubts or questions, I'll just wait a few moments and see the comment section. Just post it. And if you have no doubts or no queries, just push understood or okay or something like that, so that we can know that everybody is on the same page. Good evening, Ativat, one of our private Slack group members and a regular YouTube follower as well. So I don't see anything here, and I do understand there is sometimes a little bit of delay between what I speak. Okay, there it is. Understood. Thank you for the confirmation, Joe. In that case, let's now head over to our next discussion, which will be the chart of gold here. Let's see what was being discussed in our last webinar on the chart of gold here. What is it? We were expecting some pullback and then upside movement. That is seemingly the case. Let's see if there was something else being said. So we had discussed the pullback levels 2764. blah blah blah. So just check the whole thing at your end. The idea was minor pullback, then up move. 2764 was the level. Let's not waste any more time and head over to the actual chart here. Now gold on screen. 24 January, somewhere here. The market was somewhere here. Did the market go to 27? You know what? I'll just check the actual price level. Market was trading around 2772, and we were expecting up to 2750 something. So market was trading somewhere here. And the minimum second pullback was around 2750. It went a little bit deeper. And since then, we have also updated the counts, right? So now let's look at that. Freshly booked profits on gold. So Etivet was with us. He is in the private Slack group, so he was checking all this stuff. So yes, in this case, I think it's better to lead with what was being discussed here on the chart of gold, and then we will move forward with the other stuff. So here is the chart of gold. We were trading it. What is it? Added long, stop loss 3743. Let's see the whole thing. Yeah, so this was a very simple trade. The price level was 2783. So let's write it down. That's where we entered the longs. 2783 will be somewhere here. And incoming targets, these are higher time frame targets. Obviously, we didn't wait for them. Partial longs closed on profits. In profits, stop loss moved above and trade. So it's a free trade now. Whenever you move the position above your stop loss, considerably above your stop loss, then you can say it's a free trade, because no matter what happens, you will get out in some profits, and you already booked some. So we closed this around what is this level? 2805. So this was the whole trade on gold which we have booked. Not whole, actually, this is a partial trade. Some positions were left open, which were later on booked right before this webinar, I think. Yes, before I pushed the webinar, etc., etc. That's why we are also late. The remaining was booked at 280, so more or less the same level. Right, so that was the actual trade. We posted it, and this was a rather low activity kind of week, right? We didn't have many trades from Monday till Thursday. I think I tried to take one or two trades here and there, but it wasn't much of anything. I think one trade was good, but nothing very considerable. And on Friday itself, that is today itself, we got a series of trades, right? I could have traded euro as well, but then again, I was busy with gold and positions in crude oil, etc., etc. Right. So we have checked the crude oil trade. We just checked the gold trade, and yes, here is Etivat. Here is Joe. Hopefully, Joe was also with us in the trade, and Raghu was there. Raghu, also a member of our private Slack group, has made a profit on gold. Well, that's good to know. Our members are benefiting, and hopefully, you guys who join us publicly are also benefiting, because we do discuss a lot of setups every now and then. Actually, very regularly, we have discussed what is the screen flashing now, 377 trades in the last 149 webinars. And adding on the gold to it, which is a plus one, it will become 378 trades, right? So this was discussed in the last webinar. The swing setup was discussed, of course, not the short-term entries. That's just not possible to discuss publicly. Anyways, now we want to come back to our discussion and give you a clear picture on what I think is happening on this market. So over the weeks, I have tracked and traded, not traded, tracked multiple accounts on this market, which was kind of weird and all that. But that's how the markets are, sometimes unclear, and we have to wait and stuff. So what's really happening here is we are assuming that from this point of reference, which is price level around 2787, we are expecting a possible flat. I mean, it could be anything else, but even if it's any other complex structure, we are expecting this leg to follow through, this B wave. Why? Because it has already taken out the high. of the point of reference. So given that all of that is very clear enough, we can just say this is the A and this is the lower degree A, the lower degree B, and then we are expecting a lower degree C to come into play. Lower degree C can have targets ranging from 2845 to 2877. Right. So in this case, we are near to 845. So we'll just consider that as our main theme or main target here for the time being. Right. That was also the target I was aiming for if I was able to hold that breakout longs which you took from here to here. Anyways, so now we have wave B, which is progressing as a three-leg structure. Wave A up, dot B down, and dot C up. So you know already all that. This is your dot A. That's your dot B, and that's your dot C in play. Now, in this particular case, dot A is complete, dot B is complete, dot C is in play, and C waves in a zigzag kind of correction will always have five wave structures within it. Five wave means an impulse 1, 2, 3, 4, 5, or diagonal 1, 2, 3, 4, 5 with 4 and 1 overlapping. Again, if you are not clear on what I'm saying, just forget about it. It's not a lead wave class after all. Those who know it. So, anyways, so what we do have here is a consideration as a impulse in the other direction. It is a rather complex structure. Even in impulse, sometimes you can have many times you can have unclear looking structures. I have deciphered it after much work and much time spent. Here is what we think is happening possibly. So the C wave will have what you call a five wave structure: one up, two down, three up, four down, and five up, right? And in this case, what we do have is one up complete here, two down complete here, and three up is in play, right? Three up is in play. So one complete here, two complete here, and three is in play. So now we don't really care too much about this and that. We wanted a rough idea of how it's progressing. We are considering this as a diagonal, right? And the two is complete here, and then within the three, this is the dot one or the wave one of the third, two of the third, and three of the third, right? There will be then a four of the third and five of the third, right? So given all that, we are expecting at least one, two, and two legs up. After that, there will be a correction, and then one more leg up is what we are expecting. That's the main theme on gold here. Nothing really, nothing very extraordinary or whatever. You got the point, right? And again, we don't even care about the two or one. That is, we don't even care about the three legs. If the targets are achieved beforehand, 2845 is hit, then that's good. We are more concerned about the profits, right? That's what trading is all about. Not the elite wave counts, not the targets, just making profits. Even if you can just trail your long entries and get out before 2845, but with enough profits, then who cares about the counts or anything? That's what these things are about, right? Speculation is all about this. Right. So, guys, I think that's about it for our discussion on gold. Hopefully, you are clear on all this. It is a bit complex. I would highly advise you to plot the counts on your own end and check the internals. I think after I pushed the counts here, it should be clear enough. It was not very clear, I have to say that. And fellow members would have also realized that because we were dabbling with multiple counts, but that's just the nature of markets. Although we did have overhand as on this one as over hypo 2, it later became hypo 1. But then again, that's how things are, right? So with that being said, we will now head over to the chart of S&P's 500, and let me just I can't see any questions here. All clear. Thank you for the explanation. Thank you, good Joe, for letting our audience know that, or letting me know that. Perhaps that's the better wording. So now here we are on screen with chart of S&P 500's last from our last recording. I mean, multiple things happened. I guess you guys are aware that what is it called? Yeah, LLM engine, I think, came from China, which claimed that they have made the engine with the much less costing compared to Chat GPT and all that Gemini and stuff. And given the fact that most of this boom is coming from Nasdaq's 100 and Nasdaq's 100 is getting its boom from Nvidia and other Chat GPT related stuff which is going on. and of course crypto related stuff. There was a huge fall. Again, I don't need to tell you the news, but in case you weren't aware, you can just check it. So there was a huge fall which suddenly shifted our analysis to our hypothesis too. Good for us, we were better prepared. We were covering both hypotheses, the bullish scenario and the bearish scenario, and the bearish scenario played out. Again, we were not aware of the news. I can't see news in the future. I can just read the price and project my outlook on it. But it is good to know that even in the worst case scenario, the count itself helped us to navigate the market. So anyways, let's just see what was being said on this chart, and we will then proceed further. So we were discussing two counts here, I think, in the live webinar itself. One was A down complete, B up is in progression, then it will be followed by down leg. And the next one was, yeah, this was the main theme here. We discussed it in quite detail in our last webinar, which basically suggested that, what was it? This basically suggested that this market, once it breaks below this CN color or bluish color channel, it will give a correction. And this is literally what happened. Once the news was out, the market broke below this channel and the correction was sharper, much sharper than expected. Right. So we discussed it in the live webinar as well. I thought I was only covering it in the private group, but this was all posted live and you guys were there to see it. Right. That's all there. So again, I'm not going to go into too much detail. We are just going to head over to the live chart now and see things as they progressed on the live chart. So here is the CN channel. I'll give this market a +1 as well, again, for the very simple reason because we were able to decipher all this in live market and discuss in front of you guys. So S&P alongside gold is a +1, making our count coming to 379 for this week so far. Right, what was being discussed? Sharp fall, right? So my primary view so far is that this sharp fall could just be part of a correction. That is to say, from this point of reference, we are possibly seeing a sideways correction, maybe. That is always the idea. Whenever the market gives a sharp fall, it generally does not have the propensity to go up completely. Like, it can go up faster. I have my own theories on how much it will go and all that. Those all have already been surpassed. I generally do not expect it to take out the highs so suddenly, right? But in this case, it is doing that. So we have to discuss the counter view here. First view I have is that this market is just giving a flat kind of correction. That is, it will go down, it will take out the high point of reference, and then it will go down before taking off. So that's basically what's happening right now, seemingly. In this case, we'll label this as an A down, B up, and C down. Within the B wave, we will have three waves: A up, B down, C up. Literally the same as just discussed in one of our past charts. So here is your A complete here, and we have assumed that a possible diagonal may be in play. 1 second here. Yes, we are assuming that this is heading up for a diagonal. Dot A, and then there will be a dot B and a dot C. Right. Again, I can be wrong here, and perhaps if the market sustains above 6130, it can take a straight off flight. I don't have any strong evidence to suggest it will do that, right? But what I do have a good understanding of is if this market takes out this low, this yellow trend line, let's say, then we can have some short-term scalps here. As a matter of fact, we can also then look to position ourselves for the upside movement, which we expect by entering, let's say, 1/10 of the position and then adding more as we go up. That's just an idea. And of course, I'll have to wait and let the market do its thing, let the market go below this trend line, and then we will analyze if it's worth our while to enter anything here at all, or we should just let it go and take things here at the breakout above the last high, right? But so far, it is clearly looking like a zigzag correction from this point of reference. You can just say that we are tracking a zigzag, and within this wave B, the zigzag, if I magnify this wave B, it would be looking like this. Let's magnify it here. A down, B up, and A up, B down, and C up. This is your A up, this is your B down, this is your C up. So B down is still to come into place. So we are waiting for this. Again, this is all hypothesis and projections. If it happens this way, we will look to play it this way. If it doesn't, we will see what is going wrong or what can we do. So it's a question from Jeffrey, one of our private Slack group members on the daily chart. Do you think wave 4 is complete and we are in wave 5? On the daily chart. Generally, I do not like to discuss higher time frames in public too much, but let's see. On the daily chart, we are looking for wave 4 as per Jeffrey. In this count, I don't have wave 4. I have a wave 1 here. Perhaps it is possible I'm following an alternate view, which I have posted in Slack. So we have a circle 3, we have a circle 4, we have a circle 5 here, completing the 1, and this is the 2 of a lower degree, and this is so we are in a high time frame. On the high time frame, we are in a dot dot 1 and dot dot 2 kind of scenario, right? So we are in a dot dot 3, so it's a super bullish leg if this count is correct. Do I have a less weaker count here? Check. Perhaps we are looking at the triangle count. Yeah, in both counts, Jeffrey, we are looking for a wave 3 in play. Even in this count, whatever this is, we are assuming a dot 1 here, dot 2 here, and what is this? So we are assuming 1 here and then A, B, C for B was a triangle and then C was a leg down. So we were basically assuming something like this, where the B was a triangle and then there was a pullback to the trend line. Yeah, that is worth noting. The market respected a trend line. I don't know if you pointed out earlier or not. Anyway, so in both cases, Jeffrey, we are just looking at a series of ones and twos and ones and twos. So hopefully that clarifies your count, your understanding. So in this case, either the 2 is complete here or it may propagate sideways a little bit within this box range, break the upside. So what will happen generally in these cases is the market will break the upside, move a little bit up, give a what you call a false break, and it will trap some traders here, trap longs, right? And then it will go within the range again. That is, it will go back within this box after trapping the longs. That's here people will book the losses, and then the market will actually rally. So anyways, that's what we are expecting. If we want to go long here, we will look for only and only swing perspective longs. That means very big stop loss. Stop loss will be somewhere here 5966 or whatever something, which is very huge if you ask me. And that's why I'm not taking any trades on S&P right now. Perhaps there are sector and stocks which are specifically bullish, and we can look at them. But as such, on the index, even though our idea is bullish, the counts are bullish, and we are in a series of very nested, strong, impulsive progression, we still are not taking longs. It all comes down to risk in this particular case, and risk is not I'm willing to take too much right now. Right, that's about it. It was a longer time frame. Never mind. Thank you. I'll probably post a little bit higher time frame chart later in the group. So if there is anything else, you can just look at that, and if there's any questions, you can just let me know there. Right, that's about it for our post, or what do you call, analysis on S&P. Nothing much to discuss here. If you guys have any more questions or doubts or whatever, you can just let me know in the live chat. Otherwise, we are moving forward with our last chart, BTC. Right, as I mentioned in the announcement, in the about us section, you can check the announcement. We will be looking to add a new index most likely, and I have already seen Jeffrey's suggestion. He is asking for Nasdaq, so I'll wait for some other suggestions from other people. Generally, Nasdaq is a good index, but it does move very fast for a week to week coverage. It's the kind of index which kind of needs a day to day coverage kind of thing. So anyways, we are also open to currencies pairs, right? USD JPY is a good one. But then again, those of you who are in the private Slack group, just let me know by DM or direct message in hashtag general. I'll look into what to cover or add to our coming sessions, right? And yes, before moving to our last chart, just make sure, guys, you have hit the like button if you are enjoying the content. And also, if you are enjoying it, do not forget to share the content. Moving forward, we are looking for a more global audience and, of course, higher number of views so that we can continue providing this weekly series and continue adding more and more new innovative instruments and high volume instruments for you guys, right? So kindly contribute by sharing the content. So watch out for this fib level if it breaks high on S&P. I think you are mentioning Etivet. So on S&P, I am currently avoiding it. The reason is I think that is regarding S&P, right? HSI was high volume to cover. Does Hang Seng? Yes, I am covering Hang Seng. As will that have enough high volume? Let me just check all the things which I'm covering. The Russian index, the Brazilian index. But again, those are things not everybody can trade, right? Right. So Etivat is asking about upside break. So what I would say is that can be a good strategy, but what I'm more concerned about is this leg down. When I first looked at it, as you were following me in the Slack post, I was considering it as an impulse down, 5 leg down, and then I was hoping that there will be a minor pullback, which will probably end somewhere within 6040, 6050 range, and then give a down leg. So it is kind of not doing anything, and to be honest, it does look like a 5 leg down still. So here is a possibility that something else might be going on here, and basis of that, I am not very interested in this market as of now. So by something else, I mean that it is possible that this market is still within this correction which started from here. Maybe, right? And it is not looking very pleasing. I have checked the internals and the projections, etc., etc. But it is possible that the two is not complete here, but maybe still continuing, right? So there are some unpleasing counts which are possible on this counter right now. So that's why I'm less interested in it from a shorter time frame as well as a longer time frame perspective. Idea remains bullish, but I remain out of this market. And I think crude oil will give us some very good trades, followed by Euro USD and gold. All three are set for some extremely good moves, right? So wait for it. Anyway, I will not give you a concrete answer because I don't have one right now. And as such, I do have some answers, but there are things I cannot say in the public webinar. Right. Probably we should do a private webinar once in a month. That's an idea I've been thinking. Only for the members. But it will be short, 20-30 minutes, but you can then ask things by using audio. We have a setup. You can just use the audio profile here and just ask things. Let me know what you think, guys, in the private Slack. Just DM me or push it in hashtag Junzal about this idea. Right. Anyways, let's move over to our next or last chart here, which will be the chart of BTC. Let's see what was being said on this chart in the last webinar. Yes, that will be that is something I should probably do. So now we'll be coming with the problem of the timing. You guys are all at different time zones. So probably what I'll do is I'll push some time ideas like this time, or we can do it this time or that time. And whenever you guys are available, I'll consider doing it. But again, keep in mind you guys have to be available because it's a private webinar. Unless you guys join in, I can't just go on speak like I do in these public webinars. Here, even if people don't join in, they watch the recording, so it won't be like that. All right, so members, just watch out. I'll just push a time, and we'll take things from there. I think at least once a month is something worth doing. Right. Thank you for the quick feedback. Anyways, on our last chart of Bitcoin, let's see what was happening here. So we were on the last chart of Bitcoin in the last webinar conducted on 24th of this month. We were just basically yes, Raghu. I'll just push the timings and we'll just take it from there. So what we were basically considering in our last webinar was we were basically suggesting that or expecting that the market is in a wave B progression and then it can head up for a wave C. Now, wave Bs are known to be complex. In this particular case, the market did not just remain within its range. It, I think, expanded it to the downside. And so the count is being followed, but not in the way we expected it previously. So what I'll do is I'll just go over a live chart instead of blabbering this and that on the recording. So here is the live chart. And here is the A wave we were expecting. And here is the box for correction we had drawn up. So as such, you can expect a correction within this whole range. This was the expectation, but as you can see, the market did break the downside. So it basically expanded the range on the downside, hence trapping some short sellers here or short traders. Probably they booked their losses here or here somewhere, and then the market is probably rallying. I mean, who cares? We are we are just going to decipher it from a lead wave perspective. We are expecting that A is probably complete here, B is complete possibly here. So basically, long story short, we are assuming that this market is heading up for the C. So what I'll do is I'll just move it here. So here's the A, here's the B, and here's the C. So interestingly, since the B is looking like it's complete, we are assuming our point of reference over here. This is the point of reference. The price level will be coming around. What is this price level? 97,836, right? And from here on, I am assuming that we are heading up for the C wave. C waves will have 5 waves inside of them. And in this particular case, that means an impulsive progression is possibly in play. Let me just. So we are assuming that an impulsive progression is in play, which will mean a wave 1 up, 2 down, 3 up, 4 down, and 5th up. So in this particular case, this is the 1 up. This is expected as the 2 here. I have checked the internals, everything. And I think the 3 is still in continuous play. So if this count is correct, it should not break lower than the price level of 101438. This becomes your stop loss, or my stop loss, I should say. So I'm just roughly speaking, and keep in mind I'm using this data feed. If you are using a different data feed, the price levels will vary considerably. So long story short, we are assuming that a nested impulse is in play, and we are currently within the third of it. If this works out, then we are also taking out the lifetime high very soon, and that also means that this market can actually follow through with this count. So this looks like a strong count at this point in time, and the risk looks well, from a risk perspective, it is very near the top. So risk to reward will be at least more than 1:1. Right. So that's the play we are expecting. Invalidation level 101438 based on this data feed. Check the exact levels. I'm just giving you a rough idea. We are assuming the wave 2 here. And for very conservative traders, they can take the invalidation level at 100249 or 250, let's say, over here. Right. But overall bias remains bullish on BTC. Right. So far, it has followed our lead wave projections, but I will not give it a +1. I'll just keep it as two trades discussed from our last webinar or counts have played through. Right. So with that being said, keep a watch out. Keep it in your watch list, I should say, and probably it will give us some good trades in the days to come. As such, it is also looking like a swing perspective good idea, and short term perspective also it will give us some ideas if it plays out. Right. With that being said, I think we are done with this discussion. Hopefully you guys enjoyed it. Those of you who are joining in the for the first time or watching it as a recording later on, do keep in mind we go live at 10 p.m. GMT, so you can just 10 p.m. GMT, or is it yeah, whatever, just check the timings in description. We were late today anyways, so I will not go too much in details about when we go live. It keeps changing a little bit, 15-30 minutes sometimes. Right, so that's about it for this webinar. Do not forget to share it, guys. We definitely need to increase the views, and that is why I'm making the efforts of covering some other market in order to make this more reachable to the global audience, right? So thanks for joining in. Thanks for those of you who remained here. Yeah, Raghu, thank you for the correction. Lot going on here, and I was just suggesting something which is not true. So Raghu has corrected me. Our timing for GMT is 4:30 p.m. and 10 is for Indian time. Again, we were late today, 30 minutes or roughly so. You're very welcome, Charles, and thank you for the remarkable answers. You're very welcome, Joe, for your kind, nice words. Thank you, Marco, and thank you, Raghu. And all right, guys, I'll see you in the next one. Take care, and bye for now.